Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the March 22nd edition of Basis Loaded with Joe Schmit. I am Joe Schmit, and this episode is produced with the help of Paige Driscoll. And what we do here is we break down the latest from the NDPSR report, starting with butter. This butter number coming in at 240.56 is a really nice number relative to the CME one-week average of 233.70. That is a +7 positive basis. We traded 3 loads on the CME that week. +7 is well above our normal expected 2-cent positive basis. This is the low week at the CME, and it doesn't look like much of that low went in. Buyers took advantage of the lower value, purchasing a large amount. The volume here on the NDPSR is big, 4.8 million pounds, so well above our expected 3.5 million. So the tail of the tape in butter is higher than expected basis on higher than expected volume. In cheese, blocks came in at 194.11. That is a +2.5 to the CME one-week average of 191.60. So that is in line with expectations. +2 is our expected basis. This is 2 weeks in a row that the block has returned to normalized basis, giving us a little bit of an indication that perhaps the forward export fixed price sales that were done at the end of last year and had been shipping throughout the course of Q1, it would appear that those higher price export sales are winding down. And what we see here on the NDPSR are just your typical forward contract sales based on prior week CME average +2. We did trade 9 loads on the exchange, and at the CME, we are 1 week past our high. So the CME moved lower for a little bit before making new highs. Typically on a move down, we expect the NDPSR to lag a little bit. Seems to be what's happening here, as 2.5 is a little bit higher than our expected basis. Volume in the block remains to be a little bit of a disappointment, coming in under our 12.5 million expected sales volume, coming in only at 12.2. So normal basis in the block on lower than expected volume. In the barrel, 168.55. That is a +5 to the 2-week average of 163.45. We averaged 37 loads per week to come up with that 2-week average, and that includes the 1 week at the CME, where we traded 50 contracts on the exchange, and of course they raised the price 14 cents to get those contracts purchased. So 163.45, this NDPSR coming in at a +5 is well within our expected range, 4 to 6 over. You would expect a lower basis than that with all the weight that we traded on the CME. You know, those 37 loads comes out to about a 1.5 million pounds traded at the exchange. If those sales are coming out of the manufacturer, they would be reported here on the NDPSR report. The volume here is higher than our expected 13.5 million on the NDPSR, a million over, but we're not really seeing the big bulk in sales that we saw at the CME, which would represent 1.5 million pounds transacting on the CME. You know, the volume on the CME in barrels has been the story so far. And my first response is a lot higher than normal. And as you see here on this chart, which details the CME spot cheddar volume through March 22nd, the 422 contracts of both blocks and barrels traded at the CME, well, that's the high in the last 7 years, but not by much. Marginally higher than the 2018 total of 408. And it looks like most years going back, with the exception of 2022, we averaged over 300 loads. So higher than normal volume at the CME, but not too far out of line. The only area that this volume, this 422 loads that we traded at the CME, gets out of line is when you compare this year's volume back to the 2015-2016 volume. And I think that's important to note because the volume that's trading at the CME and cheese this year is primarily in barrels. in 2015, 2016, the basis for forwards based on prior week's CME average was about 2 cents, similar to blocks. Barrel capacity ran a little tight. We had a lot of barrel expansion, processing expansion going into 2017, and the manufacturer decided to monetize that new expansion, that the barrel basis would shift from 2 over to 6 over. And it's possibly more than a coincidence that 2017 forward, we see this big switch in volume, big increase in volume, especially barrel volume, on the CME as participants in the CME spot market attempt to manage their average price and inventories. So I'm not saying that the change in basis is the only reason that we're seeing, but it's definitely something that should be taken into consideration when trying to come up with barrel estimates in the weeks to come. If you move on to weigh, this weigh number coming in at 41.95 represents a -3 to the CME 1 week average of 45 cents even. We traded 9 loads on the exchange. Big volume, 6.4 million pounds. So again, almost 2 million pounds over our expected 4.5 million. And if you want to be a glass is half full type, if you go back to the NDPSR March 4th value of 40.83, the manufacturer was able to move a lot of weight at a 1 cent premium to prior week's NDPSR. So although down week to week on the CME, still above the prior week's NDPSR, and the manufacturer was able to move a lot of weight. And then lastly, non-fat, 122.49. This is a nice number. That's a +5 to the CME 1 week average of 117.15, and that's with 11 loads traded on the CME. So this is our third consecutive week that we've had higher values on the NDPSR. Again, if you want to use that March 4th NDPSR value of 120.26, the manufacturer was able to call more than a 2 cent premium to prior week's NDPSR and a +5 to the CME weekly average. So nice prices using either metric and still able to move our normal 20 million pounds volume. So I'd have to say it's a win for non-fat. So this is week 3 of 5 for the March pricing cycle, currently getting a March class 3 expiration of 17.97 and a March class 4 expiration of 18.50. So that class 3, class 4 inversion that we've had for quite some time continues to persist. However, if you carry current CME equivalents out through the entire 4-week April pricing cycle, currently getting an April class 3 of 1975 and April class 4 of 1832. So current CME equivalents equate to class 3 over class 4. Who would have ever thought? We'll see what happens in the weeks to come. Certainly a lot of pricing left to do on the CME for that April contract. Until next week, I am Joe on behalf of Paige and the entire EverAg Insights team. Thanks so much. Take care. Bye.